Okay, ladies and gentlemen, thank you for joining. We are slightly late. Again, I'm Manoj Attri, real estate agent with Remax Hallmark. Let's start with the agenda of the day, and then we have our expert also waiting in for us. We are having some Skype issues. We'll try to resolve them as we go along. And let's start with the agenda of the day. Okay, so let's see what is our agenda of the day, and let me take you there. So give me a moment here, and let's start with the agenda of the day. So today, again, we'll be starting with, as we have been doing it in, I'll be starting with my real estate monologue. And as the year is coming to an end, so we need to see where we were in 2019 and what are we expecting in 2020. We are finishing 2018 and what are we expecting in 2019 and 2020. And let's have a look around where things were and where they're going. So that would be our real estate monologue for today. As we had been going through these various webinars, we had last time done Homebuying Step 3, a guide by Canada Mortgage and Housing Corporation. And while we were doing the step number 3, we came across credit score and credit reports. So that is what we were reviewing last week, understanding your credit report and score. We covered around 8 pages, so we'll be continuing over from page 9 onwards of that report and score. PDF, a very, very important PDF. And I'll also walk you through where all those links are. And so you can comprehend and understand. It has tons of details and tons of materials to review, because most of the time, whenever we are like, we all have to know what our credit reports and scores are for various purchasing, buying, selling, and anything, procuring any amounts of funds from the market. So that is part and parcel of our format of taking funds from lenders. And we need to know our credit reports and scores and how we can protect our data there. So we will be going through continuing this one for today. Our mortgage expert will be there throughout the process in order for us to review this whole thing. And also when we are understanding the credit report and score, he will be there with us to walk us through some of the various details there. Quite an expertise of his is required in order to, get the right numbers there. Okay, so let me start with the agenda of the day. So give me a moment and I will take you there. Okay, so now let's head up to the agenda of the day, and that is Toronto housing market 2019 and 2020. So we are almost finishing 2018 and shortly will be in 2019, and we need to see. So there was an important article recently, and we are going to review this one. It came out on the 8th of December, so just 2 days ago. And they are, what are the forecasts and predictions for 2019 and 2020? I will review this article and I will give you the brief from a real estate point of view. And so we'll try to give you a perspective, and then the mortgage broker also can give his thought on the whole thing, so that we can comprehend and understand from various factors and from various formats how the whole thing is falling in place or not. Toronto is still a seller's market. Very, very true. The reason being here is that the supply is less and the demand is more. So the seller market is there. Now, this is what I'm seeing when I'm saying Toronto is still a seller's market. It is still a seller's market. In 2016 and 2017, when we had seen that 32 or 33% increase drastically, and the market had gone completely crazy, that is not the scenario. There is a regular appreciation, 5 or 7%, but it is still trending towards a seller market because the supply is low. Demand is more, supply is less, so it becomes a seller's market. Sales in Toronto housing market dropped precipitously in November. Okay, now there are two things that are going on here. One is they are like comparing it to last month. 6251 sales compared to 7492 sales last month and 6455 transactions in September. That's a drop of 3.4%. So they are reviewing the last month's format from onwards. That is how it is dropping. But we'll read something more about it, and then you'll be able to comprehend. Okay, these sales may have gone down, but the amount of the dollar value hasn't gone that much down. That's what has to be understood from this particular one. It is not good, and the real rough period for sales could be February, March, and April of 2019 due to US trade uncertainty and rising interest rates. So for the next few months, that is what this article is walking us through, that we may be heading for more rough period for sales. That means the sales may drop further up to the end of March before it picks up from the spring season, and that is where things may work. Let's take a look at the November stats and then look further in what might cause a Toronto housing correction. Okay, now this is a link to which I will be taking you after going through this particular article. We'll be going on Toronto housing corrections and picking up some 14-15 points. Why is there a correction? And I would work more or less from this particular point of view that yes, from 2016 onwards till the entire 2018, we are expecting a correction, and that correction is still in place, and it's going to continue for the next year. Let's head more towards the GTA home prices listed sold for an average of this much, which was 3.5% from last year November prices. So yes, that's what we were saying. Those sales may have gone, the number of sales may have gone down, but the prices have still remained 3.5% higher from last year prices. So prices have not gone down. They are like the usual trend every year between 3 and 5%. That's what goes on every year, apart from the exception for 2016 and 2017 when it rose to 32-33%. They are now going at the steady pace of regular yearly increase, and that is what we are seeing. So there were 3.5% increase. Listings have dropped, and that is what I am saying. Supply has dropped, thus putting upward pressures on prices once again. That is where things are. Supply is low, demand is more, and that is where like no matter what we look at from any format or anything, and that is where things are there. GTA continues to struggle with development restrictions, and this article down the line is blaming the government quite a lot that the development restrictions are there, and that is the reason why we are struggling. GTA continues to struggle with development, so the supply is getting restricted, and that is where everything is not catching up to the demand. Okay, what's wrong with the GTA housing market? Let's head to this particular article. The problem with Toronto real estate market is mortgage lending restrictions. Yes, we all know that a stress test came over. Everyone has to now go through tremendous challenges to get your pre-approvals or your mortgage approvals done. Tremendous mortgage lending restrictions. Rising interest rates. Yes, we were thankful that the third time it didn't go up recently because of Calgary oil prices. We have like 2 weeks prior, we had the GM shutdowns looming large, and rising interest rates were restricted. So twice we have had that, and that is struggling wage growth. And last week we also discussed that we are struggling with growth. Next is the development restrictions. Development restrictions. Let me, Faisal wants to, I see my Skype window in the corner. Can you love that out? Okay. Let me see if I can, we'll test you out. We'll keep you there. You should be able to see us. Can you hear us, Faisal? Let me get him to see. If
yes, I can hear you.
You can hear me? Okay.
Yeah.
That's fine. So we'll be just finishing this article, and then we'll get your update on this.
Okay.
And we take it from there then. Okay. Give me 1 minute here. Okay. We are on this particular one. Let me go get back to the article again. Okay. Development restrictions. That's what we were there. Like, yes, a lot of things are not. NIMBYism. There is like this is a term that is used when locals do not allow some development in their neighborhoods, and they that is also a problem. And artificially inflated housing prices. So it's the inflation. Artificial inflation, that is also playing some role. We'll have to get some more info on this particular one, what exactly are they referring to on this one. The government is definitely suppressing home purchases by those who need a big mortgage. Yeah, we've already known, like stress test is there, and lots of restrictions by lenders are there these days. And that is why those who need a big mortgage, yes, there are nth number of making sure that they qualify for it. It is, and that's everything of those things are putting a toll on the housing. But buyers are finding ways to buy. Yes, we've been going through this, like they're looking for some second lenders, and that has also come into the market quite a lot. Now, let's look into a short on the rental market. The Toronto rental market is lucrative for investor owners. So yes, the investors and owners lobby is doing a good business there. So the Toronto rental market is going good because they are able to procure very good amount of, and the properties, they go away very fast if you want to rent. Leasing has become very easy. But for renters who cannot buy, resentment is building. Yes. So now one group is happy, the other group is not happy, because now everyone is not able to rent out so easily. And lots of paperwork is required. Rents are very high. You are in multiple offer situation, even in renting listings. So that is where the reality is. In October, the average rent price for one-bedroom condo apartment in the GTA rose by 9.5%. That's a very high number. In one-bedroom condo apartment, it's now close to $2,163, almost close to $2,200. Quite high. Average rent for two-bedroom condo apartment went by 8.3%, very high rise, to almost $2,800. So $2,200, $2,800, these are very high numbers. Rent controls, builders' discouragement will dry up new construction. And this is what they are now telling you, leading to higher rents, lower vacancy rates. Yes, higher rents we have from past few months, I have been constantly harping on this issue that the rental market has become difficult. It's leading to higher rents, and that is where you have to be very much aware of what is going on and where you should place your info and interest on purchasing. That has become a big issue there. The big question now is how much interest rates will rise. Government mismanagement is the culprit. That is what the article I briefed you shortly. That is what this article is coming up with, that the government mismanagement is the culprit. The big question now is how much interest rates will rise and there be a Toronto housing crash in 2019. Buyers are wondering, and even in the last webinar, that's what we are. We are all no one has a clue these days where exactly things are and where they are heading. Once the US tariffs kick in on 1st of January, a big adjustments for corporations will occur. So that is some of the, again, some of the trend lines. The Toronto housing market may recover in spring of 2019. So for the next 3-4 months, they are saying that it may go down, but it may recover in the spring of 2019. So that's the update coming from this particular article for now. The GTA market is still a big market. Yes, we know that. It is there. A Toronto housing correction is possible in February and March. So for the next 2-3 months, the sales may go down, but the prices are not going down. I mean, they are still holding on. I mean, there was a 3.5% increase in 1 month, and that is where things are. Now, the big picture, long term, housing prices in Toronto will keep rising. That is the bottom line. That is what you have to come up with. Housing prices in Toronto will keep on rising. So it is in your interest. If you are wanting to purchase, go ahead with it. Rental market is becoming difficult. But if you are keeping on the sidelines, it's a good time to buy. Winters are usually good times to buy. And it seems like it should be much better even if you are wanting to go ahead this particular one. Detached house prices have dropped by $41,000. So that is good news for you guys if you're wanting to purchase in the 416 area. Condo prices have fallen by another $20,000 again in the 416 area. And in the GTA, they have gone down by $13,600. So these are on the basis of the average ones. Average condo apartment is around 615. That's in the downtown core, has gone down by 20K. And again in the GTA, which was around 556, has gone down to up slightly from last month prices and down to this much from September. So they are hanging between $10,000 or $15,000 there. Now, this is what the article is sharing it with you. Buy before the rates keep rising. That is what this article is giving you a heads up on. Buy before the rates keep rising. So if you are in the market wanting to purchase, you need to go and purchase it. It appears no Toronto housing crash is imminent and prices will return to their upward climb. That's what I said. Supply is less, demand is more. So even from all this jugglery which is going on in the market, the Toronto housing crash is no Toronto housing crash is imminent. And prices will return to their upward climb. Inevitable, high interest rates, Canada's lack of competitiveness will create a new crisis. Almost similar format as we were in the last webinar. No one has a clue. Lots of information is coming from different angles and correction is on its way. That's the gist you can tell. But in case if you're in the market, buy before the rates keep on going. And that is because even if I'm showing properties and we are seeing a slight less. You're not in a multiple offer situation in everyone, so you are still have some room to negotiate, and that is good if if you are on the sidelines and wanting to purchase a property down the line or not. New listings will likely drop as homeowners. I have already given you a brief right from the first line. New listings will likely drop as homeowners feel more comfortable with their employment outlook and enjoy the housing prices rise. So those who were wanting to sell, they are holding on to it because it is difficult to buy in this high market. So they are holding on to it, and then they may, if they're postponing them, and so that's why the listings are likely dropping, and that is where we are. With the economy improving and a cessation of building in the GTA, rents will likely take a big jump by spring of 2019. So that is, again, we are again getting the same update from everyone that there is a big jump coming across in the spring of 2019 for the rentals. Okay, so now as I briefed you, I will be taking you to this particular Toronto housing correction, and this was like a article which was written a few months ago, but some of the things that they had highlighted are still well in place and they need addressing. Okay, so let's head over to our expert and take his brief before we jump onto that particular article, and let's see if I can get him on Skype. Faisal sir, can you hear me?
Yes, sir, I can hear you.
Okay, so somehow the Skype window has frozen, but we have your photograph here. So give us an update on this particular article. What we can, if you're, were you able to listen properly?
Yeah, I was
Go ahead,
able
sir.
to hear everything, and I was making some notes
Okay.
as I went through. So few things that I like about the article, but there are certain things I somewhat agree, somewhat don't. The first one, it's amazing how it touches the supply and demand, the economics part. Because Toronto GTA is an area where there's people from all over the world moving in here, all over Canada. They're wanting to settle in this neighborhood, in this part of the country. And therefore, it's right that the supply cannot keep up with the demand. What it does, it pushes the price up. So that's one thing to consider. And this is one of the big reasons rental market has been challenging. Because you as a realtor, you know, when and if you're trying to get a client a rental property, you go in and there's a lot more applications that you had to compete about 5 years ago. Right?
Yes. The basic thing is, I mean, like I'm getting surprised even. Till a few months ago, we were hearing one bedroom condo is at 2,000. Now it's gone to 2,200. That means from these numbers only, that means the supply is less.
Yeah.
And demand has gone more.
Yes. So that's one. Another thing I would like to touch is this January 1st change, the way it has been positioned that, you know, prices may go down. I don't agree with that completely, specifically in the GTA area, because where your demand is high and supply is low, prices don't go down.
True. Yeah. Yes, you may have a very valid point there. Yes.
Right?
Yes.
Because
yes.
demand is not going to change.
No, demand is not changing. Yes.
No, people still need homes.
Yep.
Okay. So there may be case where instead of 10 applications for rental, it may be 6 applications.
Yep. That's true too.
Okay, but the dollar amount will not change. So if someone is waiting on the sideline, hoping that they would get a better deal next year before spring, I think that is something that is a very risky move. I would not wait for that.
No, absolutely. Like even last week discussion of ours was, I mean, there are 3, 4, 5 factors going on, and those 3, 4, 5 factors are still continuing. And so basically, like as we usually expect that the volume of buying and selling goes down in the winter months, it may not happen.
Mhm.
So
Um, and yeah, a very good point you touched. That winter is one of the better times to, look in the market. Specifically, the clients that we have, um, the ones that have, the ones that do not have 20% down. Those are the clients that need 5-day condition.
yes,
And winter is a better time to go because the demand is not as much. You may not get a deal because there's not enough properties, but even having 5-day condition is a deal.
yes, because you enter into this multiple offer situation otherwise.
Yes. And in the multiple offer situation, you don't have a chance of 5-day or 3-day for that matter to even think about it.
No,
You are signing that dotted line. You're either buying it now or someone else is.
yes, yeah, okay. Let's head to the second part of this article, and let's see if I can get that across. Give me a moment here. And then I have, they had picked up some very important 14, 15 points which they had highlighted some few months ago, and they were still valid. So let me take you all to there. So now this was an article written in September regarding Toronto housing market crash. And again, in this particular article, I just will go straight to where they had highlighted some of the points, 14, 15 points, and we are going to review those points and see where this is. This is what they were saying. The Ontario economy is looking risky, and the picture is less positive for Ontario. And they had highlighted this almost 15 points here. And I am finding that by going through even last webinars on the same topic and in the same format, that these are still very valid, and they are still there. The Toronto Stock Exchange is one of the worst performing in the world. Wow. The NAFTA deal may be cancelled and full tariffs applied to Canadian exports. So this one has gone through, but it's still the Congress is still there, who has to get it approved, and where we are there. The TPP deal would open up Ontario to cheap Asian competitors. The price of oil is rising and raising the Ontario's cost of doing business, and that's what we are here. We are still there with the Calgary oil, and that is where the things are still very much true. Real estate is very expensive. Rent to income ratios are extremely high in the GTA. Very, very true. Interest rates are climbing. 2 times they've already gone. We just missed on the third one, which didn't go through, and otherwise we would have been in more trouble. Consumer debt is maxed out. The Ontario government is anti-business and anti-housing growth, and that is like their inference, like the mismanagement by the government, and that is what they are highlighting. And they need someone to come across and get this addressed. Ontario taxes cannot generate enough money for infrastructure improvements. The Canadian dollar is rising and eroding Ontario's competitive advantage. Canada has been near last in direct foreign investment for many years. And these are some of the other ones which are coming from the South. US tax rates have plummeted, giving companies reasons to relocate there. Cash strapped, stressed out millennials will finally give up on the dangerous gamble of buying a home for $600,000 plus. The butt of this, because there is nothing even in the $500,000 range these days. The federal government may raise the capital gains tax. So these are some of the assumptions that they are saying. So let's head over to our expert and get his insight on this particular one. Yes, sir. This was an article in September, but they are still, most of them are still valid.
It's an article. I'm looking at it in the entire picture. It's a valid article with a lot of valid points. However, a lot of them don't apply to GTA market, because the headline of that article is GTA market crash. When your demand is so high that your supply cannot keep up, regardless of what you want, like where the prices may be going, there's someone else who's willing to pay more than you.
That is what we are discussing. Same thing from the last week.
Yeah.
There are 4 or 5 factors which are going on at the same time. Supply is less, demand is more. Yeah. There are lots of other factors which are like whether it is US, some spillover is coming from the US, some spillover is coming from the Calgary oil, some spill was coming from the GM shutdown.
Yeah.
Everything is in there. That is what we were saying. We have no one can foresee exactly what is going on, but there is going to be a correction. And then winters is also a play, because people do get busy with holidays, and that is some of the times. From what we can infer here is they may be having some sales which are going down. It is not the value of the property which is going down. Because see, there is less supply, so but obvious the sales will go down, the number of sales will go down, but it's not that the dollar figure is going down. That has to be seen by anyone who's sitting on the sidelines. And next is try to be get it done when everyone is busy with the holidays and things like that, and you may have more time to get it done, instead of then going in the summers when everyone has enough time and everyone is working with the nice weather. Go ahead.
Yeah. Also, in the summertime, it's a challenge. If you are putting any less than 20% down, then it's a challenge, because insurers take some time to approve, lenders take some time to approve. You need a little bit more time. If your down payment is not as much, you need a little bit more time.
Wonderful. Okay, so now let me take my team back to the article. That is where we were. So give me a moment when I can just start explaining a few things to everyone, and then we can guide them there. Okay, let's head back to some of the interesting things that we are wanting. Now, okay. Yes, this is what I was wanting to share with you all is in this particular live stream at the bottom where it says show more, you will be able to see all these links right there. And that is what the housing market corrections, housing market crash, both the articles that we did, understanding your credit reports and score, and then next time we will be doing a workshop here. We have these links again, everything is there, and then you can go further down where you can obtain your Equifax report for free, TransUnion report for free. That's the one, which TransUnion Credit Bureau request form. You can get it for free here. All these links are there at the bottom of the live streaming. When you click on show more, Credit Karma link is there, Borrow Well is there, and that is what I was wanting to highlight for a moment. Okay, let's get to the next part of it. Give me a moment here so I can take you to this particular one. Okay, we are now working with credit report, and let me head you to another article there before I jump into the example there. Now, this is where we were last time. This is a book which we have been reviewing, Home Buying Step by Step, a CMHC first time home buying step guide, and we had completed articles step number 1, step number 2. We had gone through step number 1 is home ownership right for you. All that webinar had been done. Then we headed next to article number 2, where it was, let me see if I can get the article second, where we did, are you financially ready to own a home? So that is what we had gone through. Then the next one we did was, are you financially ready to own a home, was the second article. And I have this thing has frozen. Okay, so yes, it has now financing your home. And within this particular one, we had got like, we know your credit score. So this is where it took us, and that is where we headed last time in order to learn about this particular credit report and score. So we had, now let's head over to the credit report and score section, and let's get down to this particular, which is the most important one. So we were at understanding your credit report and score, and this is the topic which we were dealing last time, and we had reviewed a few pages in here. This is done by the Financial Consumer Agency of Canada. It is an extremely well written and very, very intricate with all the details regarding the credit score and report. Okay, so now let's, tremendous table of contents was there, and which will guide you. Building a good credit history is important for your financial health, which we went through last week. Now we are heading to the, we had completed all the way up to page number 8. Who can use my credit report and score? So this is what we finished last week, and now we are starting with this particular one, how to understand your credit report. Okay, so let's go through this. Your credit report may contain the following information. It has your name, it has your date of birth, it has your address, it has your telephone number, it has your social insurance number, it has your driver license, it has your passport number, it has your current and previous employers info there. Credit history and information. Now, okay, this is what it has. It has your credit accounts and transactions. So all your credit card, retail store card, lines of credit and loans, they're all there. At this moment, let me get a brief from my expert there when it says about loans. Give me a moment. Let me get him online. Faisal,
Yes,
we used to get this information that the mortgage loan is not on the credit report and score. Is that right, or is it true or no?
some years ago, yes, that was the case. Now every mortgage is on a credit bureau.
Okay, so basically, okay, every mortgage and from how long are you now seeing? Because sometimes I used to get this information that you may have taken a mortgage from one company for one house, and you may go and take a mortgage from second company from a different house. Is that true, or? But they
It
are
was true.
okay. So now you say they're all getting reported.
Yes.
And when you say reported, that means they are you have the.
On the credit bureau.
So on Equifax and TransUnion, you will find that information there.
Yes.
So that means in case if you have defaulted also, that information will also be there.
Absolutely.
Okay, and the amount of that loan will also be there. So
Absolutely.
so that means like you cannot go and start doing too many mortgages transactions there. That is true.
Absolutely.
Wow. So they are like curtailing it from every angle, huh?
Sir, I believe this is what has happened in our country here. See, people come from different parts of the world, and they come with different expertise, intelligence. And why I point that out is everyone's brain works in a different way. And here we are, they look at our policies here, and they start coming up with creative ideas as to how to take advantage, and I should say how to take misadvantage of things. And then when that happens, someone notices and starts putting policies and procedures in line to stop that.
So basically, these private companies have put these loopholes, closed those loopholes.
Exactly.
Awesome. Awesome.
When I was at TD, this used to happen quite often. Someone would have an RBC mortgage, they would not disclose, and oh, it's my first time home. You do an application, submit it, and then CMHC comes back and says, well, they have another home.
Oh, okay.
All of us. Now, if it goes to another insurer or the first time was 20% down, then it doesn't matter. The insurer didn't know. So
Okay.
there were ways to get around it.
But now those loopholes are closed.
Yeah, just because it was not reported on credit bureau. Now, just to avoid losses, lenders have started reporting.
Awesome. This is good for everyone.
Yeah.
Okay, so now let's head back to the article again. And so that is where credit accounts and transactions are all getting reported. Telecommunication accounts such as mobile phone and internet. Yes, that is what we discussed last week also. Mobile phones and internet and anything. And as per our expert, that it's easy because not all checks and balances are there when trying to procure a phone, and it can be easily done. So they have started getting updated on this particular one also. Negative banking information such as checking and saving accounts closed for cause due to money owing or fraud committed by the account holder, and bad checks, also called non-sufficient funds or NSF checks. Wow. Okay, let's get this particular update from the expert there. Faisal, non-sufficient checks, bad checks, fraud committed by the account holder, everything getting reported?
Sir, you will see a smile on my face.
Okay, go ahead. Go ahead.
I think it's in everyone's interest
Absolutely.
to have that reported.
Absolutely.
Because it's in our financial industry, because the way our banking system is, it's easy to do all those wrong things, including writing checks on an account that does not have enough money, writing checks from one account to another account to third account to fourth account, and creating false money, having not paying fees on a checking account and letting the account sit there and collect fees and be in the negative for 6 months or more. I think these are all important things to get reported. And yes, they're all starting to get reported.
More control from money laundering aspect of it.
Money laundering and individuals that do not are not responsible. So it wants to show, I guess, if you look at it in a bigger picture, it is all part of credit history.
Okay. Makes sense now. Let me get back to the next part. Public records such as bankruptcy and legal judgments. Okay, let's read it here again. And registered items such as a lien on a car or a house that allows the lender to seize it if you do not make payments. Okay, bankruptcy and legal judgments. Okay, but let me ask you something here. I do not see consumer proposal here. Is that also covered?
Yes. So bankruptcy so yes, it is part of public records.
Consumer proposal has also come as a part of the public records.
Yes, part of public records, because public records essentially means, let's say if someone does not pay spousal support or child support, that's part of public records.
Okay, and legal judgments, but obviously,
yeah.
So
legal
whether
judgments, let's say someone lost a case of something and they owe $10,000, then that's part of legal judgment. Bankruptcy, we all know. Registered liens, if you own a car and the car has financing, it has to show on the credit bureau.
Okay. So I was just concerned about, because so mortgages are there, consumer proposal. I mean, the whole 9 yards is there. Is that right?
Everything
at the moment, even if they have written or not written there.
Yes.
Okay. So basically everything, whatever you are doing these days, is getting reported.
And on top of it, it's not a limited list. It can be revised and more things can be added as time goes along.
Wow. Okay. Let's head back to the article again. Inquiries, debt sent to collection agencies. Okay. Debt sent to collection agencies. Okay. So inquiries from lenders and others who request your credit report. Okay. So how many places are you getting applied for? Okay. Next is remarks including consumer statement, fraud alerts, and identity verification alerts. Okay. In short, everything is getting reported. That's the bottom line.
Yes.
Okay. Let's head to the next one. Is my mortgage included in my credit report? Yeah, we just discussed it out. Your mortgage information and your history of mortgage payments may appear in your credit report and may count towards your credit score. A home equity line of credit that is added to your mortgage will be treated as part of your mortgage for your credit. So that's what we have already said. How long does this information stay on my credit report? By law, negative information can only be kept on the credit report for a certain length of time. For most information, the maximum is 6 or 7 years. Okay. Let me ask. So basically 6 or 7 years you are saying, but is it 6 or 7 years for both bankruptcy and both consumer proposal? No.
You know what? The key word that is uses is maximum of 6 or 7 years.
Okay. So it can be less.
It can be less. So I have seen collections that we paid off and we were able to work with the collectors. They fell off the bureau in 3 years, 3.5 years.
Okay. So basically, let me understand this particular part. You have got discharged, whether it's consumer proposal or whether it's bankruptcy. Now, from the day of this discharge, are we talking 6 or 7 years, or from the time that it started?
No,
You had filed.
day of discharge. From the date the discharge letter was drafted.
So you will see that year and various. Is it a one rule that applies to all, or like you have seen different files with different?
So bankruptcy and proposal, I would say. So proposal tends to vary depending on many different factors, but bankruptcy is maximum 7 years, no more. I've never seen bankruptcy more than 7 years.
And so, first of all, it'll take you 7 years for that to be removed, and then can you apply for a mortgage, or you can even like once you are in bankruptcy, and then still you can apply for a mortgage.
It really depends on the down payment part. I've had clients that have had 20% down and they were able to get a mortgage 6 months from bankruptcy.
Okay. So, this has come to my know-how. See if you can guide me here. That even like, let's say, suppose you had 7 or 8 credit cards, and you went through consumer proposal, but only 1 or 2 of those banks had closed them. The rest, they were all open. So, is its credit being okay?
Technically, no.
Okay.
But if the credit cards were never closed by the bank, by the other institutions that were not included in the consumer proposal, then they're considered they're there, and you can continue using them and keep building your credit.
So now, do you have to restart building your credit? I mean, what happens at that? Like, let's say, suppose your credit score was 700 before you applied for consumer proposal, and only 2 cards were closed, and the rest 3-4 of them are still open. So now it will take a dip. Is that right?
It will take a dip, but it will also go up fast because you have some credit cards that you can use to build the credit.
Right away. Yes. So you don't have to close, or you don't have to apply for newer cards. That will help you. That will help you. And at least it is better to have more than 2 cards. That's what everyone, after bankruptcy, you need 2 credit cards.
2 or more.
2 or more. So 1 card will not reestablish you. It is better to have 2 cards after the bankruptcy. Makes sense?
2 cards and 1 small loan is an ideal scenario. Ideal.
What do you mean by loan? So someone should take a loan?
Small amount, because what the policy says, 2 revolving credits, which is your credit card.
Okay.
And 1 installment credit, which is your loan.
Okay. So once you take a loan and have 2 credit cards, that reestablishes much faster.
That is a perfect scenario.
That's a perfect scenario. Wonderful. Good to know from the expert and from this right up there. Okay, so let's head back to the article again. Awesome. So now let's go through the next page. Okay, that is what I was telling you about, that the length, they have written it in such a nice way, length of time that credit reporting agencies keeps on information. So go through that link, read these particular ones. You'll be able to understand what happens when it's a credit transaction, what happens it is a secured loan, what happens with the inquiries, judgments, collections. Every detail has been given here, and that is what is interesting when you go through this PDF, so you can comprehend lots of things here. Registered items, bankruptcy, multiple bankruptcies, consumer proposals. So let's get an update with our expert here. So basically on bankruptcies, they're saying 6 years, whereas they're saying consumer proposal 3 years.
Yes, 3 years is, it's not maximum though. It says 3 years, and then if there are a few other things that could change those numbers.
Okay. So, but what exactly is the major difference? I mean, why would they like, because in both the cases, you are you are repaying in a consumer proposal, whereas in bankruptcy you're not paying anything. Is that right?
Exactly.
That's
Yeah.
okay. Okay.
You're
Let's
just basically paying the cost of bankruptcy. It's a very small amount. Versus consumer proposal, you're paying a percentage of the debt that you have, and you're spreading it over the number of years. So yes, you are paying. You're just not paying full amount,
okay.
and the interest stops.
Wonderful. Okay, so let's head back to the article again and let's see. So that is where this is an interesting read. Length of time, it's still continuing. Orderly payments, debt management, remarks. Now, how are my debts rated on my credit report? You must have heard quite a lot of times, and this is where it explains you R, R1, R2, R9, and that is where this is R is used, and then I is used for your credit, O is used for open status credit, M is for mortgage loan. Okay, so I think so. A few of them. Let's head to us, the expert again. So when I am seeing M, this must have been a recent one because now they have come up with the mortgage loan on that one.
Yes.
And you must have seen I and O earlier.
Yeah, IOR earlier.
And,
M has been in last few years.
okay. So that is where because that was what my information was from that particular one. Okay, let's head back. That is where it is. So again, the R numbers are being explained in detail. What does R0? R0? I don't think so. There is anything R0.
RZ.
Yes, I can hear you now.
Okay. R0 means it's too new.
Oh, okay. Too new to rate.
Too new to rate.
Okay.
Usually it starts with R0 for the first month or two, and then it moves on to R1 or R2 or R3, whatever the.
Okay. Let
yeah.
me ask you. Lots of clients have most of the time says they have no credit or their new credit. What exactly would those two terms will be?
So they have new credit means they their social insurance number was issued recently, or they never used any credit. There are files that are rare, I've seen, where the client has been living in the country for 3 years, 4 years, but they've never applied for any credit. The cell phone they have is prepaid. Everything, there's nothing on the credit bureau.
Okay, and then how do you address a lending for them?
It's a challenge.
It's a challenge.
It's quite a yeah. It's a challenge, but there are ways to do it. We've done it. In fact, one of our client, we got an approval about 6 months ago. I had to use something called as alternative credit options.
Yes, getting their bills that they have paid.
Yeah.
But I mean, I have seen lots of people who have an averseness to credit cards.
Mm-hmm.
They don't like it.
So some individuals don't have either the control to spend, or two, don't want the risk of having a credit card per se. I myself like to use as little as possible. It's in a financial sense, you use it today, you forget, and then the bill comes a month later, and you've already allotted that funds that income that you have towards something else. So you have to really get used to it, because it's not paid today, it's paid tomorrow.
So in the end, It is like in case if you're not using these credit cards, then you don't have a credit history. Is that right?
Exactly. It's you have to use it to prove yourself as to you have good credit. And another thing that you will see is if you don't use your credit cards for long enough, they stop reporting, and
Again,
therefore,
again, go slowly on this. So you have not used, you have credit cards, but you have not used them for a long period of time.
yeah,
So
and
they stop reporting. Okay.
they stop reporting because you have not borrowed to pay.
Okay.
And therefore, I've had individuals that had some credit cards. Then if they have some financial problem or trouble, and they close it off, and then they don't use it for years, and they have no credit.
So now again, if they have to seek some money for mortgage or for any other, they have to again reestablish everything.
Exactly.
Wow, they may and what happens is, let's say suppose if someone has credit cards, stopped using it, now he's using cash for a period of time. Does their credit score drop, or what does it happen, or does it just stay where it is?
If they do not use any credit, and there is nothing reporting on the credit bureau, there is a status that develops on the credit bureau. It's called beacon reject.
Okay, what does that mean?
That means zero credit. Your credit score is zero.
Oh,
You
so
don't have credit score.
so that means it is if you want to, like if you're thinking purchasing and borrowing funds for a period of time, you should keep on revolving it.
Exactly.
Keep on using your credit cards.
Yes. And one good thing about credit cards is, let's say if it's a $10,000 credit card, you don't have to use much. You can use $200-300. That's fine.
Just keep on revolving it. Just keep
Yes.
keep it working, so that down the line you can borrow funds.
Yes.
It is okay. So that has to be understood in general. Okay. So back to our 1 second. So back to our PDF. You can go through R1, R2, R3, and all the details are given here. R9 is written off as bad debt, sent to collection agency, and bankruptcy, which we are very much aware of. How can I build my credit history for my credit report? Let's head back to the expert. Let's see what an option is to apply for a secured credit card. Okay, he's the expert in building credit history and credit report. Let's head back to him and ask his. This is your expertise here. Go ahead.
How can you build your credit report?
History
Building.
for my credit report.
Yeah. So building credit history is not difficult.
Okay.
It's just making sure you're paying payments on time. And first of all, the first step is usually the difficult one. Nobody wants to give you a credit card no institution wants to give you a credit card when you don't have a credit history. So 9 out of 10 times, you have to put $500 aside, or $1,000, whatever you choose, and apply for a secured credit card.
Okay.
And then start from there. Once you get your first credit card, usually within 6 months, you can get your another credit card, second credit card, and 6 months from there, you can get a third one. And then you sort of go from there.
This is the most important question I keep getting. How can I improve it faster? Credit score.
There are ways to do it. What I recommend is making payments often. That is one thing that really helps. Instead of making payment once a month, start making payments every 2 weeks.
What about as soon as you get the bill, just pay it off?
Yes. Once you get the bill, you pay it off immediately. That's fine. But let's say if I use the credit card at a gas station, come home and make the payment, that does not count towards your credit history.
Oh, Okay. Go slow on this. Why doesn't it count towards your credit history?
Because the borrowing and the payment was made on the same day.
Oh, so what would be the time? So basically, once a month when you get your bill, just pay it off right away. Will make
Exactly.
much more sense.
Yeah.
Otherwise, there's no credit history.
No.
Oh, okay. So that will help you. And what about keeping the balances zero or minimum?
Balance zero or minimum is a good idea. Don't use any more than 50% most times.
Okay. I was going through this PDF. They suggest don't go above 35%.
35 is an ideal number, but most individuals have a credit card of about 5,000.
Okay.
That's 10,000.
Mm-hmm.
Now, with the way things are, you always tend to use some. So I like to say 50%.
Just to be safer
Yeah.
side. Okay.
If your credit card is 10,000 and you're using at 9,500, that's no good.
That's would be maxed out, huh? So
Because at the end of the month, the interest will get tacked on, and the balance will be over 10,000.
how about a suggestion to when you're trying to get some mortgage or trying to get some funds for lending for yourself, why not keep everything in place for a few months and improve your credit score so that you can procure a good mortgage or a loan, and then maybe then you go back to your old habits.
That's another smart way.
Because the main thing here is the entire thing depends on your credit score.
Yes.
And in case if you are in the market for improving some procuring a mortgage, I would say and if you have running very tight numbers for a few months, hold on to everything and get your ducks in a row.
Yeah.
And make sure you change your habits and get the biggest financial decision, get it addressed. Because if the credit score is good, you will get a very good interest rate.
Yes.
And at what stage now do you see that the interest rate changes? Let's say suppose if someone has 600 or someone has 700 credit score, what would be the interest rate? Is there a difference in interest rate?
You know what? There is slight difference, not a whole lot. So 680 and above, you get premium rates. Under 680, you don't get premium rates, but you're still very close to the premium rates.
Okay, give me do you have the rates? Let's say you want to throw in some rate.
5-year fixed right now.
Okay.
We can get you at a discounted rate of 3.39.
Okay. And if your credit score is 680 and above.
680 and above.
And what happens is, let's say suppose your credit score is 600.
You will be getting very close to 359, 369. Not much difference.
And how much would be the difference on a $500,000 property? $100, $200 per month?
Not even.
Not even that. $50,
$65. Yeah.
$65. Okay, 65 is not bad. If you can save, because 60.
It's a small amount, really, because
almost close to $1,000 per year.
Yeah.
Okay. Makes sense. Okay, that's just an update.
But see, the fact is, if you are waiting for your credit score to go from 630 to 680 to get a better rate, I don't suggest that.
Okay, because the market would have gone higher anyway.
Yeah, then you're paying for the same property much higher, or your situation might change, your income might change, and you may not qualify for a mortgage.
But if your credit score was somewhere around 670, improving it within a month can work for 680. Yes, okay, can make a difference. Okay. Let's head back to the article again there. And so how can I build my credit history? So that was the important part here. How to improve your credit score. That's what we were discussing it now. payment history is taken into consideration, use of available credit, length of credit history, number of inquiries, and types of credit. So let me get him to discuss on this one the length of credit history, number of inquiries, and types of credit. So let's go one by one. What does it encompass? Length of credit history. How does that help you?
Because let's say sometimes clients have only 6 or 7 month credit history.
Okay.
Now that's not a long enough credit history to
What would be a good long term?
2 years.
2 years and more. Huh?
Yeah. However, there are programs that are newcomer to Canada programs.
Okay.
That in that you can go with 6 months, 1 year. Like it's an option there.
Okay.
Number of inquiries
Yes.
do matter, because if you have, let's say, 5 inquiries in 2 weeks, it is going to drop your credit score, and the last lender would start questioning as to if you went to TD, Scotiabank, BMO, and RBC will ask that, I see TD, Scotiabank, BMO, what happened there?
That is the one of the important points that I always walk my clients into. Okay, like you print out your own credit report and have a mortgage broker review it and seek on just on the basis of one check and get him the best rates from the market. Because when you go to different banks, every bank is going to check that, and that will become a problem.
Yeah, you're right.
So that will be a smart way of addressing it, because when you are pulling out your own credit score and report, that's a soft inquiry, if I'm right.
Yes, you're right. Absolutely.
Okay, and once you send that report to your mortgage broker or a lender, and that will be in their interest. Okay, so let's. What do you mean by types of credit?
There are different types of credit. The ones that we saw are revolving, installment, open status. Like status open close is just open or close, but there is revolving, there is installment, 2 different types. If it's a mortgage loan.
So various types, and they will all be considered accordingly. Wonderful.
Yes.
Okay. Payment history. Let's go with payment history. Okay, and this is the most important factor for your credit score. When you paid your bills, late or missed payment, debts you did not pay that were written off or sent to a collection agency, whether you have declared bankruptcy. Your score will be damaged if you make late payments, have accounts that are sent to collection agency, declare bankruptcy, withhold payments due to a dispute, and lender reports your payment as late. Let me get his expertise on this last one. Withhold payments due to a dispute. What do you guide clients on this one? Withhold payments. If you're in a dispute, what should be the best way to approach it?
Pay your part of the agreed amount, and continue fighting for what you think is not fair.
Okay, once you have paid off, how will they be resolving this issue?
Okay, so I'll give you an example.
Okay.
A client of mine who's self-employed had paid someone to do Google AdWords, like something on Google, and they paid $2,400. And the company that was supposed to do the Google advertising for them did not deliver the service.
Okay.
And there was a dispute between the lender, the credit card that was used, and my client. And my suggestion to that client, and he did not want it to pay. And my suggestion was to the client was make the payment and continue fighting with the credit card company and the company that took money from your credit card,
Okay.
instead of not paying and that being reported as a late or not paid on the credit bureau.
And then your credit is spoiled also.
Exactly. And that sometimes makes or breaks a decision, like ability to have a mortgage.
Okay. Yeah, that would be a smart way of handling this. Wonderful. Okay, so we are covering fast, and then we have, these are some of the tips in this particular PDF. Always make your payments on time. If you cannot pay the full amount, make at least the minimum payment. Very important. If you think you will have trouble paying a bill, contact the lender right away. See if you can work out a special arrangement to repay your debt. Okay, let's ask the expert here. Have you seen like lenders accommodating it?
Sorry, can you repeat the question?
If you have trouble paying a bill, contact the lender right away. See if you can work out a special arrangement.
Yes, I have seen lenders accommodate that. Yes.
And I mean, it is a general rule that they are very accommodating, or like a case by case?
Case by case, I would say, in certain scenarios are already in most lenders' system. So one of them that I know for sure is a death of a spouse.
Oh, okay. And they are accommodating, huh?
They accommodate that because if you go to the lender and say, my spouse is passed away, I'm on half the income or sometimes no income for a couple of months. Because if your spouse is passed away, you are not in any shape or form to go and perform your job.
Understood. Very, very genuine problem. Yes.
Okay. That is one. There are multiple other ones, but that one is
the top one. Okay.
Yeah, top of the.
Okay. Let's head to use of available credit, and let's see the tip on that particular one. That is what I was telling you. They are suggesting try to use less than 35% of your available credit, and the expert also gave you an update like general you will see all the way up to 50%. To improve your credit score, consider keeping an older account open if you no longer need to use it. That's where like he has told you like 6 months or 1 year, more than 2 years will help you, especially if there is no annual fee. Use it from time to time to keep it active. You have to make it active. This is also coming into hard hits versus soft hits. Rental and employment applications may be treated as hard hits. Interesting. Like last time we had discussed, like rental applications are needing it, and in your employment information applications are all the, and they may be taken as hard hits regarding the number of inquiries. Will shopping around for a car or mortgage hurt my score? Let me read this to you because I found it very interesting. When you are shopping around for a car or a mortgage, try to do it within a 2-week period. All inquiries related to auto or mortgage loans made during this time are usually combined and treated as a single inquiry. Let's get the expert to. What do you say about this one?
Sorry, sir, I was.
Not a problem. When you are shopping around for a car or mortgage, try to do it within a 2-week period, and they all will be combined in. All inquiries related to auto or mortgage loans made during this time are usually combined and treated as a single inquiry.
It is true.
It is true. Yeah. It is true. So, like, it is not a red flag, but it may. They say like with every hit, it takes 10 points down or something. What's exactly is that?
See, what happens is if you're doing an inquiry every, let's say, a month.
Okay.
It speaks that you are doing it for different reasons.
Okay.
Not just one reason.
Mm-hmm.
Versus if you're doing it within 2 weeks period, inquiry, you're most likely shopping around,
Okay.
right? So
Yes.
that changes um, that changes the entire reason for inquiry.
Okay. But I mean, as per as they are explaining now, is that all these related during this time within a week or 2 week period, they are combined and treated as a single inquiry. Is that right?
Yes, yes,
Okay.
they are.
They are. Okay. Limit the number of times you apply for credit in a short period of time. It is a good idea to seek credit only when you really need it. Okay.
Absolutely.
Okay. Your score may be lower if you only have one type of credit product, such as a credit card. That's where you have just guided them. Have two credit cards and one loan. It is better to have a mix of different types of credit, such as credit card, auto loan, line of credit, or other loan. That's what you had guided them just now. Having a mix of credit products could get you more points, but don't go overboard. Very true. Okay. Now, how to correct errors and check for fraud. Very, very important. Let's go through this particular one very fast. Watch out for mistakes in your personal information, wrong mailing address, incorrect date of birth. Okay, let me ask you, the expert here. What do you say to this particular information if there is like incorrect date of birth? I mean, do they get it wrong sometimes?
Sometimes I have seen date of birth wrong. Instead of December 10th, 2018, it's October 12th, 2018.
Okay, so reverse of that one.
Reverse, yes.
Okay,
So that is one way of a wrong date of birth. Sometimes they would say, 123 Ontario Street. Instead, it is 321 Ontario Street.
oh, okay. So address is also you have seen wrong, and incorrect date of birth also wrong.
Yes.
So now, do you just call them over and it gets resolved, or how do you go about it?
There is a process. There is an update process. You have to, first step is to see what your credit bureau looks like. And then there is an update form on Equifax file,
Okay.
Equifax credit website. And I'm sure there is one for TransUnion as well. We have our own forms, but and then they need two pieces of ID, something that shows that that's what your correct address is, with some IDs, and you send that over. And within 2 to 3 weeks, it is being updated.
Oh, it is fast. It's not that it takes ages and ages.
No.
Okay. Okay. Errors in credit card and loan accounts, such as a payment you made on time that is shown as late payment. How do you address this one? I mean, you paid it on time and it's showing late.
Okay. So, and I always have this as a challenge. Clients, okay. So, for instance, let's just say your credit card was due December 10th, 2018, today. And you made a payment today.
Okay.
Now, in your mind.
Oh, okay. So you're making it on the last day. Okay.
Now, in your mind, what happens is in your mind, you're thinking you made a payment, but the fact is the payment does not get posted for about 48 business hours, which means it gets posted on the 12th of December.
And so it will be counted as late.
Exactly.
Okay, so have at least like some 3-4 days gap before you post it, because it takes banks to most of the time, even if you're doing banking and giving it online, it shows that the transaction will take place tomorrow, not today.
Exactly.
Okay. Next one is negative information about your accounts that is still listed after a maximum number of years. It is allowed to stay on your report. Okay, can you go and like ask them like from all this information, you're supposed to, like, it's, let's say, suppose it's more than 7 years and the bankruptcy is still showing. Can you go and tell them how do you why remove it?
There is a process to remove it. Yes, you will have to prove that the bankruptcy was discharged and it was 7 years ago. There's a document called a certificate of discharge.
Okay.
That's being used to prove that it was 7 years ago and therefore it needs to be updated.
Okay. Accounts listed that you never opened yourself, which could be a sign of identity theft. Very, very important. That is the reason that you should be reviewing your credit report and score, because it's the most important one that you could be in having an identity theft. Your thoughts on this identity theft and any more info on this?
Identity theft is becoming quite common. Specifically with a recent incident with Equifax and everything else in between, the way our information is passed along and so on and so forth. It's highly recommended that you check your credit bureau at least once a year, just like you are visiting professionals like doctor, financial consultant, so on and so forth. I highly recommend clients to review it at least once a year and buy a small insurance. Usually your credit card company will offer that.
Makes sense.
It's a very small amount, but it saves so much
trouble there. Yes. Okay, so what cannot be changed? Negative information only be removed after a certain amount of time. Watch out for credit repair companies that claim they can eliminate negative information for a fee. This is not possible. So be very careful about steps to correct error. This is an important one. So I would recommend you going through it and actions you can take. Support your case, contact the credit report, contact the lender, escalate your case, add a consumer statement. Those are things. How can I make a complaint? Again, as per, they have forms that you can get it done. If you feel you have not been treated properly, a credit reporting agency you can get. Okay, now let me ask him this question because I was reading about it. We have last time discussed that these are private companies. Now, if they are not listening to you, who can you go and report?
It's a good question. Most consumers don't know where to go and report. But yes, there are independent bodies that are that do help the customers. Financial Consumer Agency of Canada is one. There are bodies. Ombudsman is another one. You really have to see where the problem is and ask the company that what's the next level of me doing a complaint, lodging a complaint, and so, by law they have to disclose.
Okay, makes sense, because otherwise, I mean, like there has to be something there to have a check on check.
And most times, in my experience, you really don't even have to do that as long as you're calling and being persistent on solving a problem. The companies will actually help you.
Yes. Okay. Next agenda there. How can I get my credit reports for free? We have already told you, reports you can get it for free, but for scores you will have to pay for it. And then on those links in my live streaming and show more, you will get all those links there. And you can also go to Credit Karma and Credit and Borrow Well to get your scores for free. Does my free credit report include my credit score? No, it does not include it. For score, you have to pay. How can I contact Equifax Canada? So that these are the information for Equifax Canada. Then you have, how can I contact TransUnion? You have all the information there for TransUnion. Now, these are examples of credit reports and score. And so now the rest of the bottom is all about going through these particular credit reports and score. each and everywhere you will find that these are detailed instances when they have been explained. And I am, like, for TransUnion was shown earlier, now it's been shown for Equifax. You can go through this PDF and go through each and every item to understand this particular one, because we are already running late, and I think so we have covered the highlights of this one, and your credit score, your credit report, and this would improvements in any of these areas should help your increase your credit. So these are some of the summaries of it and highlights from source was TransUnion. This is from Equifax sample credit, and this would conclude us for this particular PDF. That was the highlight for us, and it was absolutely a great big thank you to our expert there today. We took more time because we wanted to conclude the workshop with the understanding, and for next time we will be picking up the workshop for the credit score and report. That will again be repetitive in a few of these items, and it is an interesting power presentation done on this particular credit report and scores, dwelling more into this particular topic so you can comprehend and take effective measures there. Go ahead, sir. Thank you very much for your expertise there on each and every point.
Sir, that PDF that you just went through is a phenomenal education piece for anyone. Someone who knows about credit, someone who wants to know about credit, someone who's curious about knowing, anyone and everyone. It has so much information, like wealth of information. But if you follow those small tips, your credit score will boost. Everything that is written in that document is 100% accurate.
Absolutely. This is the reason that I did this particular one, is because each of one of us has to go through credit report and scores. It's a part and parcel of our life in this part of the world.
And the
Now,
reality,
yes.
Sorry, I'm interrupting.
No, go ahead.
And the reality is no school, no college, no university teaches us this.
Yes, and the basic thing is they have simple queries and simple they would have a simple want to know what exactly is going on and whom to call, who will give us the expert advice there. There's no one who's giving us the expert advice. This PDF was the perfect one, and kudos to the team that has put this particular together, because it has been very well written. And the last part, when they are explaining the credit report and the score, the entire report, they are going line by line and explaining you everything, so you can understand. Okay, look here, look for this thing. You will be able to read and understand your credit report, because even once you get your credit report and score, it's not even too easy to figure it out what exactly is going on.
Exactly.
This PDF helps you to understand lots of things, and then read that particular one and able to find where things are wrong, where they can get corrected, and then they can always be get in touch with their expert mortgage broker or lender, because everyone is not trying to purchase a property, but they have a credit report and a score. You can go through these particular documents, and it'll be great.
Yeah.
Again, we have taken too much time today because we wanted to complete this part today. And thank you again for all your time and expertise there. We will conclude it today, and we will be doing a workshop on this understanding credit report and score. Again, a very powerful power presentation for next week. And let's call it a day. Thank you again for your expertise there and your guidance there.
Thank you, sir. Thank you for having me, and I really appreciate your presentation. It's I'm so sure there are hundreds of people watching out there that could take a tip or two away to change their credit score starting today.
I appreciate that. Thank you. Good evening, everyone.
Thank you.
Talk to you later. Bye for now.
Bye-bye.